Hey everyone, welcome back to the channel. Today, we have some fascinating updates to dive into, particularly regarding Iraq's financial landscape and some unexpected developments that could shape the economy moving forward. Over the weekend, there was growing anticipation around a potential work opportunity for some individuals, but expectations seem to be shifting, with uncertainty about when things will actually kick off. Additionally, there are reports that some people may need to work weekends for a while, adding another layer of unpredictability to the situation. However, the real headline grabber is the recent news about U.S. banks showing interest in investing in Iraq's central bank. This comes after a key meeting between Ali Al-Awlaq, the governor of the Central Bank of Iraq, and Steve Lutz, the vice president of the American Chamber of Commerce, where they discussed the future of banking collaboration and economic ties between Iraq and the United States. This development has the potential to be a real game changer, as American businesses and financial institutions look for ways to enter and expand within the Iraqi market, while Iraq's central bank appears ready to facilitate their participation. It's an exciting moment for the financial sector, with many watching closely to see how things unfold. But before we dive deeper into what this could mean, let's take a step back and talk about something even more crucial: how we manage our money. The way we choose to invest can have a significant impact on our financial future, and it's essential to consider our options carefully. Imagine two different approaches. One is like floating freely on a serene and open lake, while the other feels more like being crammed into a crowded basket with a bunch of other people. Which would you prefer? Today, I want to explore why I personally favor the floating method over the basket approach when it comes to investing. And trust me, it's not just about making the most profit, it's also about ensuring peace of mind. Let's start by examining the basket approach. When you opt for this strategy, you're essentially locking yourself into a predetermined outcome. This is similar to investing in a mutual fund or a fixed financial plan where you know exactly what you'll receive in return, often at a simple 1-to-1 ratio. For instance, if you invest $100, you'll get back $100 or perhaps a little extra. However, there's a major drawback. Once your money is committed, you have little to no influence over how it performs. You're essentially on autopilot, and your returns may not even keep up with inflation or unexpected expenses. In other words, it's a passive, rigid, and potentially limiting approach. Now, let's look at the floating method, which offers far greater flexibility. Floating your investments means having the ability to allocate your money across different assets, such as stocks, bonds, or even cryptocurrencies. This strategy enables you to aim for higher returns rather than settling for a fixed outcome. Take currency investments as an example. By choosing to invest in floating currencies, you're not bound to a simple 1-to-1 return. Instead, you might have opportunities for far greater gains, such as returns exceeding $3 or more per unit of investment. This is something you could miss out on if you remain stuck in a fixed basket. The true advantage of floating is that it allows for rapid adjustments in response to market fluctuations. If an asset isn't performing well, you can sell it and reinvest in something with stronger growth potential, creating a continuous cycle of financial expansion rather than stagnation. More importantly, floating investments offer a sense of control and empowerment. Instead of watching your money sit idly and hoping for a positive outcome, you're actively making decisions that shape your financial future. It's like the old saying, you can lead a horse to water, but you can't make it drink. The basket method is similar. You put your money in and wait, without being able to steer its course. But with the floating method, you're the one at the helm, making strategic choices in real time. Speaking of financial strategies, investing can feel overwhelming due to the countless terms and concepts thrown around in the industry. However, the fundamental principle remains simple. Floating investments provide flexibility and opportunities, allowing you to seize market advantages rather than feeling trapped in a static financial plan. And let's be honest, no one wants their money to sit idle when it could be working harder for them. So, how do you start incorporating floating investments into your financial plan? First, thorough research is crucial. Identify promising investment areas such as stocks, exchange-traded funds or other diversified assets. It's important to choose platforms that enable real-time trading and hands-on management so that you can make quick, informed decisions. Having greater control over your investments ultimately enhances your ability to respond to opportunities. Next, structuring a well-balanced portfolio is essential. While floating investments allow for greater flexibility, risk management is equally important. By diversifying across different asset classes, you can ensure that if one area underperforms, others can compensate, helping to maintain overall stability. The goal is to strike the right balance, neither too aggressive nor overly cautious. Additionally, investing isn't a one-time decision. It requires continuous monitoring. The financial landscape is constantly shifting, and staying updated on trends and new opportunities is key to maximizing potential returns. Regularly assessing and adjusting your investment strategy ensures that you remain on track toward your financial goals. Now, shifting gears, let's turn our attention back to Iraq and a breaking development that's sending shockwaves through the country's economy. You may have heard about a recent announcement from former President Trump that could have major consequences for Iraq's financial system. According to Trump, Iraq will only be allowed to use US dollars for medical-related purchases such as buying medicine or medical equipment. Beyond that, the use of the dollar will be heavily restricted. This means Iraqi citizens can no longer use US dollars for everyday transactions. Businesses won't be able to conduct trade in dollars, and even the Iraqi Stock Exchange is prohibited from dealing in US currency. This decision has sparked widespread concerns and raised serious questions about its potential impact. For everyday Iraqis, this shift could significantly disrupt routine financial transactions. Imagine relying on US dollars for years to make everyday purchases, only to find out that you must now rely solely on the local currency. This adjustment could lead to confusion, inconvenience, and frustration among consumers. For businesses, the implications are even more severe. Many Iraqi companies engage in international trade, and suppliers often prefer to be paid in US dollars. Without access to the dollar, supply chain disruptions could arise, leading to increased costs and higher prices for goods and services, ultimately affecting consumers. The Iraqi Stock Exchange is also expected to feel the repercussions. Investors who previously used the US dollar may hesitate to participate in the market or even redirect their funds elsewhere, potentially reducing investment activity and economic growth. Travel-related financial transactions are another concern. Although Trump's policy allows limited access to dollars for international travel, this restriction could make it more challenging for Iraqis planning to visit family, vacation abroad, or pursue education overseas. For those accustomed to using dollars for travel expenses, this new limitation could be an obstacle. The Iraqi government now faces a critical decision: how to respond to such a sweeping change imposed by an external power. If officials fail to implement swift and effective measures to address the situation, it could lead to growing public frustration, uncertainty, and even potential unrest. Furthermore, this policy shift raises broader geopolitical questions. How will it impact diplomatic relations between Iraq and the US? Will Iraqi leaders push back against these restrictions? And what does it mean for American businesses operating in Iraq? Reduced access to dollars could deter US companies from investing, potentially weakening economic ties between the two nations. However, there may be an unintended silver lining. This shift could motivate Iraq to reduce its dependence on the US dollar and strengthen its own currency and financial systems. While this transition won't be easy, it could ultimately push Iraq toward greater economic self-reliance. The real question is, how will all of this play out? Could inflation rise? Will a black market for dollars emerge? Could social unrest follow? The coming weeks will be crucial in determining how Iraq navigates this financial upheaval. But now, I want to hear from you. Are you more inclined to embrace floating investments and take control of your financial future? Or do you prefer the stability of the basket approach? Let me know your thoughts in the comments below. If you found this video informative, don't forget to like and share it with others. Together, we can make smarter financial choices. Thanks for watching, and I'll see you in the next one.